Hey guys, so today's topic, Tesla stock versus NIO stock. Which one is a better buy? Both companies are in the news lately, with Tesla just recently opening their Shanghai Gigafactory and handily beating their delivery numbers in the last quarter, with analysts raising their price targets for Tesla one after another. The latest upgrade came from Oppenheimer analyst who raised his price target from $385 to $612. Needless to say that the stock has gone completely bonkers and pretty much parabolic from their low of about $175 only in June of 2019 to what it is right now at $510, which is mind-boggling. NIO has been also making strides lately, showing great delivery numbers last quarter and recently announcing that they're in talks with Guangzhou Automobile for funding. The stock has gone up from their low of about $1.19 back in October 2019 to today's $4.67. So which stock is a better buy right now, Tesla or NIO? So is it like comparing apples and oranges or oranges and tangerines? Let's peel and find out what's inside. But before we continue, please subscribe to my channel and smash that like button below this video. So let's start with NIO. NIO is a Chinese pure electric automobile company which was co-founded by William bin Li. I know many of you would say, who the heck is William bin Li? And that's what I thought in the beginning, but believe it or not, he's just as well known in China as Elon Musk is in the US. William bin Li is a Chinese billionaire entrepreneur who founded or co-founded over 40 companies. One of them is called BitAuto, which is trading on NASDAQ under trade symbol BITA. So just like Musk, William Li has this entrepreneurship approach to business. Almost immediately, the company was labeled as Chinese Tesla because of the many similarities between two companies. Both companies are pure electric, both are with rule-breaking car designs, both have outgoing entrepreneur CEOs, but there are some substantial differences. First of all, unlike Tesla, NIO relies on their battery swapping technology. It had installed over 200 battery swapping stations in China and had planned to install 1,100 of them across China by the end of 2020. A full battery swap takes just 3 minutes, which gets the owners a fully charged battery faster than the fastest charging models on the market. And that's including Tesla Model 3 and upcoming Porsche Taycan. Tesla also tried battery swapping and had the process provided to a number of owners at Harris Ranch, California, down to just 90 seconds. But after a limited pilot program, the company abandoned the idea in favor of a stronger supercharger network. Tesla is rapidly expanding its network of superchargers in China and already started Model 3 delivering to their customers in China, with Elon Musk making some serious celebratory dance moves at the Shanghai Gigafactory. Tesla supercharger V3 hardware is capable of adding about 75 miles of range in just 4 minutes. NIO also operates a charging network in China and has been looking for a buyer for its power systems business in China. But where Tesla have big advantage over NIO is Tesla's Gigafactories. They just built their third Gigafactory in Shanghai, where they have started to produce Model 3 cars, with Model Y coming out a little bit later. NIO also wanted to build their factory in Shanghai, but have abandoned those plans back in March of 2019 and will continue to contract state-owned JAC Motors car maker. Having its own factory has a lot of advantages because even though the initial costs are high, but then you don't have to subcontract anyone, which gives you a lot of pricing power. Also, there's a lot of flexibility having your own factory. I do have to mention though that Tesla will only produce cheaper versions of Model 3 and Model Y cars. All other versions like Model X will be built in the US and imported into China. Both companies provide ways to order their cars over the internet, with NIO built a number of NIO houses to showcase their cars. but these houses are very expensive to maintain and operate. So NIO is switching lately to a much smaller versions of NIO houses called NIO Spaces and aim to build around 200 of them very quickly. Tesla operates through 330 stores and service locations in more than 25 US states and about 25 countries. NIO cars still hold price advantage over Tesla cars, as for example NIO's flagship model ES8, an 8-seat SUV sells for approximately half the price of Tesla's Model X, plus the government subsidies. However, Tesla's new Gigafactory in China means that Tesla can significantly cut the price of their lower versions of Model S and Model Y in China and compete with NIO on price. In terms of delivery and sales numbers, after turning in a strong third quarter performance that sent its stock soaring by about 54%, NIO reported December delivery numbers on Monday that exceeded the company's guidance. NIO said it delivered 3,170 vehicles in December, up 25% month over month, and the automaker's 2019 deliveries totaled 20,565, besting the company's guidance. And that's approximately 50% higher than year 2018. But revenue is not the biggest issue facing NIO's stock. Its top near-term problem is that NIO's margins remain negative. Its gross margin in the quarter was minus 12.1%. What is gross margin of negative minus 12%? Well, if you're making something that costs $1 to make and then selling it for 88 cents, your margin is minus 12%. In fact, you're not making money, you are losing money. So they're burning cash with an alarming speed and will require financing ASAP to continue operations. Tesla also is making noise with their delivery numbers lately. They said they have delivered 112,000 cars in the fourth quarter alone of 2019, and overall for 2018 they have delivered 367,500 cars, which is also about 50% higher than they have delivered in 2018. Tesla is expected to be cash flow positive this year, so Tesla's balance sheet compared to NIO's is day and night. It's much healthier. Tesla has a lot more things going for them besides the electric cars, such as autonomous taxi, solar business, battery business, and so on. Plus, Tesla sells their cars all over the world and NIO only sells it in China. But at the same time, it's not all that bad for NIO. Just recently, Chinese government announced that they will not be cutting subsidies for electric vehicles. Plus, NIO said they are in talks with Guangzhou Automobile to get $1 billion in financing. Those are really good news for NIO, who struggle with their cash burn. Plus, NIO's executives did say that they will get margins under control into positive territory this year. But you have to realize that electric cars still represent only 2.2% of the total car sales around the world. Therefore, there is a ton of room of expansion and market share gains for both companies. In fact, I think that both companies are on the verge of electric car revolution. I do believe that electric vehicles will represent the majority of the cars on the road in 5 to 10 years. And the biggest market for the electric cars is, of course, you got it, it's China, with its enormous population and potential. Moreover, Chinese government wants to see 7 million electric cars on the road by the year of 2025. So heck, guess what? In Shanghai, you can't even register a regular combustion engine car without paying a hefty amount for it. I believe you have to pay like $12,000 to $13,000 just to buy a regular combustion engine car. But you don't have to pay anything if you're buying an electric car. So Chinese government is very serious about that, and Tesla, just like NIO, will continue to benefit from Chinese government subsidies. Also, besides China, Tesla is expanding in the US and Europe, and back in 2019, Elon Musk hinted on creating an autonomous taxi driving network. The idea behind it is that owners would register their cars with the network and rent it out for a certain number of hours into the network, therefore creating additional income for their owners. If that happens, that makes Tesla cars not a liability, but an asset. Can you just imagine before you're going to bed, you just register your car with Tesla taxi network and let your car drive around and make some money for you while you sleep? It's sounds pretty funny and unrealistic, but that's exactly what Elon Musk is picturing. And he has proven already that he is not just words, but he is action. If what he says comes true, I can't even imagine what their sales could be. Meantime, NIO also wants to expand in the US and Europe, and they already have been working on establishing their presence in some US states and Europe, but no sales yet. In terms of the stock price, I do believe Tesla is a rule breaker. And just like companies like Apple, Google, Amazon, Facebook, when they started, and just like those companies, I do think one day Tesla may have be close to $1 trillion valuation. It will not happen overnight. It may take 5, 7, 10 years for them, but I do believe it will happen. Also, NIO, if and only if they can overcome their financing and negative margin problems, will also succeed because of the tremendous opportunity in Chinese market and potential for expansion in US and Europe. So if they do overcome those problems, their stock will be worth 4, 5, 6 times what it is worth now in years to come. So both of these companies should actually do well, but which one is the better buy? Tesla is a much more established company with much better balance sheet and a lot more things going for them. But NIO also has its place under the sun. And considering that they do have an advantage on Tesla in China because they do know how to operate in Chinese market. They know exactly what Chinese consumer wants. And with its latest financing agreement, it may still be a viable competitor to Tesla in years to come. So, bottom line, if I had $100, I would invest $70 in Tesla and $30 in NIO. That's my take on it, guys. I hope you enjoyed this video. Please subscribe, like and share this video, and I will see you next time.